All right, welcome guys. So we are live with Kim from PrimeXBT, and she is going to show us some interesting stuff and show us the PrimeXBT platform. And before we start, I am going to run some words from a sponsor, and right after the ad, we have PrimeXBT, Kim from PrimeXBT, doing the rundown of the PrimeXBT platform. All right, guys, let's go.
PrimeXBT is the most powerful trading platform offering immediate access to over 30 assets. Trade cryptocurrencies, forex, commodities, stock indices, and much more, all from a single Bitcoin settled account. Visit the link below and start trading on PrimeXBT in minutes.
Birb Network is an interoperable DeFi ecosystem offering token pre-sales, staking as a service, project incubation, and much more. Visit thebirbnest.com/Ferrum. Globe is an upcoming crypto derivatives exchange offering up to 100 times leverage on crypto and DeFi perpetual contracts. Sign up for early rewards at thebirbnest.com/Globe. Radix is the first Layer 1 protocol built specifically to serve DeFi. More information at thebirbnest.com/Radix. YFDAI is democratizing finance by creating the most secure, transparent, and user-friendly ecosystem of DeFi products. To learn more, visit thebirbnest.com/YFDAI.
All right, so guys, before we start, remember to hit that like button, subscribe to the channel, and press that little bell notification button. And we have a contest going, and maybe let's see, the contest is for 100 USD in Ethereum for 10 lucky winners. So it's 100 USD in Ethereum for 10 lucky winners, 100 USD in PXBT for 10 lucky winners as well. And this is going to get funded on your PrimeXBT account. So obviously, if you're not on PrimeXBT, I don't know what you're doing with your life. Get an account on PrimeXBT. You need one. All right, Kim, let's show us why they need an account on PrimeXBT.
Sure. Hi guys, this is Kim. I'm the lead analyst for PrimeXBT, and today I'm going to show you some simple chart patterns first for the beginner trader to find it easier to do your trading, because I've been doing training in trading for a while, and a lot of my beginner students, they have problems identifying trend lines and trend channels. So they have problem, drawing lines. So basically what I tell them is that, okay, if you can't draw lines, then maybe you can recognize patterns, because everybody can recognize patterns, right? So to make it easier for trading, you don't need very complicated charts. You don't need very complicated indicators. Just keep it simple, all right? So all you need are a few chart patterns. There are two main types of chart patterns that happens very often in the markets. Obviously, they are the continuation patterns and reversal patterns. What is a continuation pattern? A continuation pattern is a temporary diversion in the behavior of a market, and it will eventually continue its existing trend. So by identifying a continuation pattern, you can capture the next leg of a move. All right. So what happens is that if, let's say, you see something that has gone up, and then price action seems to be holding and not doing much for a while, if you can identify that pattern, then you will be able to catch the second leg of the move. So this is the gist of a continuation pattern. So what are the types of continuation patterns you should be looking at? Right. Very commonly, these are triangles and flags. What is a triangle? Triangles are formed when price action tightens into a coil. It needs to start from a broader category into a tighter price coiling action, right? So there are three main types of triangles: ascending, which is bullish; descending triangle, which is bearish; and symmetrical, whereby they can go either way. So let us look at what is an ascending triangle. Ascending triangle typically has a flat top, where you see price action coil up, right, from A to B, whereby it was very broad, to area C, where it tightens into a coil. The breakup point happens at area C, and typically you could expect that if you were to enter at point C, your profit objective will be the same as the distance. Okay, you'll be equidistance between AB. That will be your profit target. So between CD, right, where D is your profit objective, the distance will be the same as AB, from A to B, right? So you know roughly where to enter and where to exit. So it's very easy. You already have an objective in mind when you're trading patterns, right? Conversely, in a downtrend, a descending triangle has a flat bottom. You can see the bottom is a horizontal line, whereby prices was broad and then it tightens into a coil and it breaks down. So the price objective is the same as that of a ascending triangle. It's just that it's the other way. Okay. Symmetrical triangle. The diagram looks complicated, but it's not really so complicated, right? So a symmetrical triangle is something that looks like a cone. Okay, it's cone shaped. So instead of having flat top or flat bottom, the price coils into a apex, right? So it coils into an apex, and it could either break up or break down. So how you identify your price objective is the same as that of the triangle you've seen before, right? So we are done with triangles. Next up, flags. Flags are the easiest to identify, right? And it's the most fun to trade because they are usually very short-term chart patterns that gives you your results very fast, right? So what is as the name implies, right? For a flag to form, you need to have a flag curl. Usually, flags happen after a very sharp price movement. So it could be a sharp rally or a sharp drop, right? So for it to be a flag, though, a lot of people have this. They don't really get it. They get it a bit wrong because the retracement, right, could only retrace to a maximum of 50% of the initial move. The best flag happens before 30%. I'll show you later on with a diagram, so you could easier for you to understand. So basically, there's two types of flags: bull flag and bear flag, right? So bull flag happens in a very strong uptrend, as you could see here. The green line, all right, it's a very strong up move, almost vertical, right? And then it's followed by a breakout, and then price will continue equidistant with the first flagpole. Likewise, the bear flag. Okay, so just now I was mentioning about a retracement. Right, you could see that there's this coiling action over here. Right, this coiling action cannot be more than 50% of the flag. Okay, if it's more than 50%, it's no longer a flag. Okay, so simple, right? Okay, we are done with continuation patterns, and now this is a very fun part. This is reversal patterns. As the name implies, it usually means that the previous trend is going to reverse. Okay, so an ongoing trend that is about to change course usually always shows reversal patterns. So these are the easiest to identify, and it gives you a very big reward. So if a reversal happens during an uptrend, it means that price will head down soon. So if it's seen during a downtrend, it suggests that the price will move up later on. Okay. Reversal patterns typically, right, there are two. One is head and shoulders, which is bearish, and inverted head and shoulders, which is bullish, right? So on the left, this diagram here is a head and shoulders. Why is it called head and shoulders? All right, it's quite easy to identify. Head and shoulders, if you think about yourself, right, you have a head and then you have two shoulders, right? Left and right. So your two shoulders are the same height, but your head is bigger, right? So your head is actually higher up, right? Higher up than your shoulder. So this is how you identify head and shoulders. You're gonna have one shoulder here, one shoulder on the right with the head. The head is a longer distance between is bigger. It's a bigger triangle. I'll say it's a bigger triangle than the two shoulders. The two shoulders, right, are roughly equal in height usually, right? And the very important thing to note, which I see a lot of people get wrong, is that head and shoulders, a reversal has to happen when there was a previous uptrend. Okay, it cannot happen like midway out of nowhere. You know, a lot of times people see a formation that looks like that, but it's like, you know, there's no clear trend, then it's not a reversal pattern. All right, and likewise, an inverted head and shoulders is bullish. Okay, so it's like it's like you upside down. So your head, right, the big triangle is on the bottom, the two shoulders are on top. Okay, so if you could see the blue line here, right, because this one is bullish, a previous bull trend, and this one was a previous bear trend. Okay, the neckline. Okay, so after your head and your shoulders, you have a neckline, right? So when this breaks, okay, when the neckline breaks, your target will be the same distance as your head. So you could see two Ds, all right, the Ds here. Okay, so these are your inverted head and shoulders and head and shoulders. You actually don't need to remember the names of all these patterns, you know, you just need to be able to recognize them. That's all. Okay, the second type of reversal pattern is called a double top or double bottom. A double top is bearish, a double bottom is bullish. Okay, so what is double top? As the name implies, you have two peaks. Some people like to call it twin peaks, okay? Whatever you call it, it doesn't really matter as long as you can do a good trade out of it. Okay, so you have two, okay, in the double top scenario, you have two peaks that are around somewhat at the same level. Later on, I'll show you an example. Okay, so you've got two heads and a neckline, and if it breaks, you'll be equidistant, okay? And then that will be your target. One very important thing to note is that it doesn't mean that prices will go down all the way if they see a double top. A lot of people, when they see a double top, they think that, you know, prices are going to keep on going down. No, not necessarily so. Okay, as long as it hits the target, there is still a chance that it could reverse upwards again. Okay, so that's why on chart patterns, right, you need to be disciplined as well. Okay, once you reach your price objective, you need to close your trade because it can still reverse another way, right? So a double bottom, you have two bottoms, right? Your neckline, when price breaks out, you have your target, okay, which is area D. So that's quite easy to recognize. Okay. So then let's look at the PrimeXBT. Let's look at some real life examples, right? What I have here is the PrimeXBT user interface. As you can see, it's very beautiful. It's got like a very friendly color. It's not like some other people's chart whereby there's a lot of bright yellow, red and stuff like that. So PrimeXBT has got a very friendly color. So it's good for your eyes actually, because for traders, when you're always looking at the screen, you want something that's soothing to the eye. So how do you trade? Since I'm here, I might as well tell you, how to do a trade, right? When you are at the chart, right? When you log onto your account, you go to analysis, you click analysis, you would be able to see the charts. Okay, so they've got very good charts at PrimeXBT, and my chart here is Bitcoin. All right, PrimeXBT has got cryptocurrencies, stock indices, commodities, and forex. So you could trade a variety of asset classes on just one platform, which makes it very convenient. You don't need many different brokers, to make things very confusing. You'll be able to trade on PrimeXBT using Bitcoin. So a lot of people want to want to keep Bitcoin. So in PrimeXBT, you'll be actually able to utilize your Bitcoin to earn more Bitcoin. Right? So you could actually earn Bitcoin by trading Forex. How's that? Okay. So this is a fantastic platform. So how do you navigate the charts? Okay. You see at this column here, you actually see this cursor pointing to D. It's actually this one is like a daily chart. Okay, you could actually change it to a weekly chart. Zoom in, zoom out, up to you. All right. Typically, right, for chart patterns, the lower the time frame, the more you see these patterns, the more often they occur, right? The lower the time frame, the more often they occur. So sometimes if you are looking at a daily chart and you don't see much patterns at all, okay, you don't see a lot of things. It's like you don't see anything. Okay, you could actually zoom out, zoom in. Okay, you could go on to look at your 1 hour chart. Do anyone see something here? You could look at your 1 hour chart. Let me zoom out the chart a bit. Okay, or maybe a 30-minute chart might be clearer to you. No, the 1 hour is clearer. Okay. Right. Does this look like a double bottom here? Preceding trend, right, was down. It was selling all the way. Today was a very bad day for Bitcoin because Elon Musk, okay, Tesla, initially, at first they said that, they're gonna allow people to use Bitcoin to purchase Tesla cars and vehicles. And now they say that they walk back on this and said that, no, we're not gonna accept Bitcoin anymore because of environmental issues, okay? It doesn't use green energy. So Bitcoin fell a lot today, okay? It hit a low, it bounced, and when the European session came underway, because Europe was asleep when Elon Musk made the announcement, so there was another selling coming in from Europe. But the interesting thing is that a double bottom seems to be forming. But where should you do your trade? Simple, all right? Basically, there are two ways to do your trade. One is the safer one is to wait for your neckline to be broken, right? So that you know that where you can take profit. From this diagram, it looks like the double bottom neckline is at about 51,400, right? So the bottom was about 48,000, give and take, 48,500. Okay, let's make it easier. So it's about 48,500 and 51,500. So like a $3,000 target price, which would bring you up to about 54. That is if 51,500 is broken, right? So two ways to do a trade. One is to place a stock order at 51,500 when the price hits you and it goes up, and you will have entered your trade. Conversely, you could actually put a limit order here, right at the point whereby the second bottom has happened. Why traders put it here? Because for a lot of professional traders, right, they actually trade quite differently from a lot of retail traders. They would have put entry here with a stop loss, with a very close stop loss, because the risk reward is very good here. Okay, at most, if it doesn't happen, they get stopped out. Okay, they'll just get stopped out of the trade. But because of the fact that they would have a higher profit margin to play with. Okay, so this is very quite easy to identify. Okay, double bottom. Let us look at some other stuff. Let's look at let's say Forex. Let me pull out something. Okay, maybe sterling. The pound. The pound is a more volatile asset. So I would presume that it's easier to spot trends on sterling. Let's see, see anything? Sterling dollar, sterling daily. Okay, sometimes if you can't see a chart pattern up close, what you do is just zoom out. Okay, Okay, did you see like this is like only a moderate head and shoulders. Okay, it's not like it's not perfect. Let me zoom out and see. I think the daily you'll be able to see better. Okay, there's a pattern in the daily, right? Let's look at the daily first. This looks like a double top. Okay, right? 2 peaks. Okay, the neckline is here. Okay, you can actually use the platform to draw lines. Let me say I put a horizontal line here. Okay, you can put different colors. Blue, I like to use blue for support, and then okay, so that you could see, right? This is a double top with a neckline here. Okay, when it breaks, it will probably bring us down to this level. Okay, equidistance. Just now, when I was looking at the 1 hour chart, there was also this is like a triple top, okay, but it's more like a head and shoulders because this point is higher than these 2 points. Okay, it has already reached the price objective. Okay, just to show you, already reached the price objective here. Okay, this is a head and shoulders pattern. Okay, just to show you other asset classes. Let us look at, oh, okay. It automatically stopped at Nasdaq. So let's look at Nasdaq. Okay. This is the 1 hour. You don't need to bother about what 50-day MA, 5-day MA, 10-day MA. A lot of experts, chartists, they like to talk about moving averages. When you're trading chart patterns, you don't need to bother about anything because a lot of them, right, they always converge at some point. So you don't need too many different indicators to tell you how to trade. Okay, can anybody tell me what they see here? Double top. All right, neckline is close, not broken yet. So don't try to attempt a trade halfway, when the pattern has not yet confirmed itself. Always wait for the neckline to break to confirm the pattern before you place your trade. Okay, unless you are doing a trade with a good risk reward at the second peak or the second bottom. Okay, so you can see that double top and double bottoms are quite they occur quite often. Okay, they are patterns with very frequent occurrences. So you don't need to worry that there's nothing to trade. You will always have things to trade. Like I was saying earlier on, if the daily chart didn't show any pattern, go on into your lower time frames, look at your 4 hour, 1 hour, 30 minute, and chances are you'll find something. And PrimeXBT has got a lot of assets that you could trade, so you would never be able, to not have anything to trade. Okay, so this is the Nasdaq. Okay, looking a bit precarious, but it could bounce off and rebound at the neckline. So that's why it's very important that you wait it's broken. Let us look at, say, gold. Gold is very popular, right? A lot of people they like to trade gold. PrimeXBT has gold as well. This one we actually mentioned before in our weekly report. Okay, what we offer is that for all PrimeXBT users, right? All you need to do is just set up an account, and we'll be sending you free weekly updates about what happened in the market before, and what the week before, and what to look out for in the coming week. Okay, and that's actually written by me, right? So I've mentioned about this double bottom before in one of the reports. So if you become, if you trade with PrimeXBT, you'll be able to have this kind of like a tip off before the event actually happens. Okay, so we mentioned about this gold double bottom before, and then it really happened, and price objective has been hit already. Okay. Already been hit. So if let's say, is it easy to trade? For our friends, right, who still find that trading is a bit difficult, all right, it's a bit daunting, it's a bit difficult, or you are simply lazy to trade, PrimeXBT has got something to offer you as well. Okay, let me introduce you our co-vesting product offering. What is co-vesting? Okay, co-vesting is our PrimeXBT community of traders, whereby you will be able to see all these columns here, right? Okay, all these different roles of traders. You could actually follow any trader and watch their trades, or better still, you could observe your trader for a while, and if let's say you are lazy to trade, you have no time to trade, or you think that it's very difficult to trade, you could tag your account to any one of these traders and have them trade for you. Okay, all you need to do is just follow them, tag your account to them, and then when they do a trade, you enter the same trade as well. Life is good, isn't it? Right? So this is a co-vesting module, and if you want to find out more information, you could come to our website, or you could check with our PrimeXBT help desk. I believe that we have some giveaway today as well. So for our friends who want to take this opportunity, do hop on to PrimeXBT platform. And with this, right, I'm done with my presentation for today, and I'd like to thank all of you for your time. So.
Okay, thank you, Kim.
Thank you.
I want to remind some members that they can view your articles on PrimeXBT, because I enjoy them myself and I read them often. So I'm going to show them where they can find it. Let me share my screen. So I posted the blog in the comment section, and it's basically at primexbt.com/blog, and there is a lot of nice informational content in there, explanations on how to trade these markets, how to trade these patterns, market research reports, which I think are done really well, because it doesn't only look at the chart, but you also look at on-chain metrics, like these metrics from CryptoQuant. So it takes into account longer-term strategies, longer-term indicators, but also looks at recent price action. And I think that this is always a well-balanced overview of the market, and a good starting point if you're not really sure where the market is going, and what to look for. So I can definitely recommend our listeners and viewers to check out the PrimeXBT blog for these reports. I often talk with Lips, my co-host, about trading patterns like this, and I think what we look for is, especially in these bull markets, is some form of consolidation. And I think I'm not sure if you look at it the same, Kim, but mostly in bull markets you want to see some form of consolidation.
Yep.
Because it means distribution, and also that new players are buying it up. And I found a good example in the 1 hour chart for Ethereum, where this is a triangle, and of course you could also draw it a little bit like this for size. One way or another, it always points to a market structure that's being bought up, where it's points to some higher lows, the highs get higher or find some resistance, but eventually it breaks out, and that points to continuation. And Kim, I'm not sure, you haven't really talked about the context of the market, because I think that's really important often, that for example in this bull market, even more bearish patterns tend to break up more. So could you tell us a little bit more about how you incorporate that context into your analysis?
Well, basically, I will look at the general trend of the market. If let's say you always start off with a higher time frame, if you're talking about charts, right? Are you talking with reference to charts or fundamental or events?
More with reference to charts, but I think maybe the fundamentals and events also have a part in that. So let's start with the charts, of course.
Sure. I always start my analysis from the higher time frame and then move into a lower time frame, because I used to trade forex, right? And then for forex, because the volatility was very low, so if you were to trade a forex looking at a daily chart, you're not gonna be able to do a lot of trades. So like I was saying that, price chart patterns, the lower the time frame, the more often you find them. So I always start from a higher time frame and then I will move into different time frames, and by analyzing different time frames from, let's say, your daily chart into your 4-hour, into your 30-minute chart, you would roughly be able to get the direction of the market that particular day, and then you'll be able to do more trades, whether they be short-term trades or a longer-term or a swing trade or 1 or 2 day trade. So in a bull market, it's very important to remember that, like you were saying, market structure is the context of the market is very important. So for let's say for today in the cryptocurrency market, we are very obviously in a bull market, but there has been a big sell-off. I think Bitcoin dropped about 15%. However, we are still in a very strong uptrend. The on-chain analysis is still very positive, right? The past 2 days saw some people, some hodlers selling some of their Bitcoin, because I don't know, perhaps these guys were fear-driven, or they made enough profit so they don't mind taking some of the money off the table for Bitcoin to drop a little bit before they re-enter again. So in the bull market, even when you see sharp corrections, there's actually good opportunities to buy until the bull market is invalidated, which obviously for cryptocurrency market it has not. So just now when we were looking at the Nasdaq chart, even though it looked like it was a double top, we are still in a very strong bull run. I'm inclined to be on the long side of trades rather than to want to enter a short position, because the market in the bull market, longs, market can reverse upwards again very, very fast. So if you were to look at zoom out your trades and look at the weekly, or get a bigger picture, larger perspective, this could be just a minor correction. So basically looking at the type of the market you are in is important. So like, conversely, if you're in a bear market whereby, the market has been rather very, very, very weak, then, you want to be on the other side of the trade and be very careful when you are buying, because the selling pressure can wipe you out very fast. But we have been in a bull market for like 10 years, right? So the Fed is still printing money, on the fundamental picture, dollar seems to be gaining some ground lately, but personally, I think that it's just short term, because the U.S. is still printing money. President Biden is introducing more and more stimulus, and even the Fed has said that they're not going to raise interest rates. So I find that on the fundamental picture, all the traders are rather strange, and it seems to me like a coordinated effort to bring prices down so that perhaps some other people could buy up. I'm not sure about that, but looking at the charts, none of the charts are broken yet. The trend is still quite positive. So I would be careful to want to enter short trades, because the risk reward. I haven't seen any interesting short trades to do yet. So because it's a bull market, I'll still be trying to find good opportunities to enter by using personally I do trend channel trading and chart patterns.
Okay, that's a nice answer, and I think you, as a forex trader, and when I speak to forex traders, I hear a lot that they take that context and higher time frames into account, and that's where they really shine, even in crypto markets. And I basically opened the Bitcoin chart while you were talking, and I think that's where a lot of like newer traders in the crypto market start panicking when they see a big red candle like this. But the funny thing is, if you would even like draw one support at the daily chart over here, you can see that on the daily candle there is a lot of buying pressure at that
Yeah.
support, and this is basically just a deviation from that. So it's actually looking quite strong here
Yeah.
at the moment. And
And
this is
looking at that level, 47,000, price actually bounced off many times from there. So it's a very critical and very strong support.
yes, and
1, 2,
of
3, 4.
course we would be in trouble when this really breaks and closes on a daily chart below this. But right now, assuming long would be better. And this is where a lot of people today are saying, like, I'm going back to USD also for their Bitcoin holdings, while actually the trend, as you said, is still intact. So that's
The trend, your friend. So always trade the trend. If the trend is bullish, so
always trade the trend. And I think that's one of the most profitable strategies in crypto, especially in a bull market, but also in bear markets. But they are a little bit less rewarding, of course, bear markets for people.
even in bear markets, there are very good trading opportunities in cryptocurrency because of the fact that the product itself, the asset is very volatile. So you could long, you could short, and you could do that at PrimeXBT. So it allows you to buy and sell, or rather long or short. So you could trade either way. So it's
Yeah,
the
and
ability to short is good for traders.
Yeah, I just want to one thing here, Abhishek. If you look at that level that you draw right there, one very interesting thing here is that we also have a potential W on the
Yep.
on the 1 hour. So what I'd like to do, like, I'm not really a short pattern trader or a pattern trader. There's one pattern I love to trade, and that's the W and the M, or the double bottom or the double top. That's like, for me, that's a very important part of my trading system. And one very, very nice thing I like to see is when price comes down and hits a significant level, and like we're getting right now, a daily level basically could be like the range low of this current daily range. And you have a lot of buying pressure coming in on the daily, and that wick on the daily, where you see all that buying pressure, inside that wick or inside the daily candle, you will have a lower time frame W. So what I do to kind of confirm that as the actual bottom to be bought, the actual dip, is I wait for a break and retest of the neckline of the W, and that's when I have a confirmation of a bottom. And that's, I mean, like we talked about, before, a lot of new traders, they look at I've seen some new traders, they're looking at the 5 minute and the 50 minute, and they are panicking when Bitcoin drops 2 to 3%. And I'm watching the high time frame trend and the high time frame range, and like, there's no breakdown. I mean, I would agree that the current area that we are trading inside right now is a fantastic long opportunity with a great risk to reward, but it's also like, the reason for this area to be a good risk to reward area is the fact that it's so close to the invalidation area of this market structure. Because if we actually do break down from current prices, I would say that it's not looking beautiful for Bitcoin. We are really at the danger area and at the danger zone of maybe potentially seeing a massive, we got that lower high and lower low on the daily. So I'm like, hopefully, it's not beautiful.
Bitcoin has a habit of tricking people to go short, and then it suddenly reverses. It has this habit of breaking into a lower low and then suddenly reverses. So yeah, we still need to be careful, even though Bitcoin has been looking rather weak the past week because it failed to clear the 58,700 resistance, So since then, everything has gone awry. Everything has gone wrong.
Yeah, and you said something very interesting. Like it basically what you said is it makes no sense to go short. Yeah, and even if new traders they think that, all right, so we had a drop, so why didn't you short, right? Why didn't you short this drop? Well, because the probability of price actually going down in an uptrend, in a strong uptrend, is much lower, obviously, than if it were a downtrend. So trading with the trend is going to help so many new traders. And I just want to note something about PrimeXBT. So I'm trading actively on PrimeXBT, and I absolutely love the fact that you updated the platform to include USDT, USDC, and Ethereum to kind of base your account on. I think that's a wonderful thing because I'm mostly trading the forex market, and I think it's absolutely wonderful for me to be able to. I have my crypto gains, right? And I can transfer over my crypto gains in USDT within the crypto ecosystem into PrimeXBT without having to withdraw the money into my bank account and then into a legacy platform, right? So I can, within the crypto ecosystem, I can still trade the legacy markets using PrimeXBT. And that's a wonderful thing to be able to stay in crypto and still trade the legacy markets. And I think that's that's one of the biggest reasons why I'm my main day trading portfolio is on PrimeXBT at the moment. So that's a really good feature, really good.
Cool. Right, and
all right.
I noticed that a lot of new traders, they also tend to overtrade. Overtrading is rather risky. It actually burns your account sooner than you expect. So earlier on, we mentioned that you always trade with the trend. So for new traders, it's best to you don't have to do every trade. This problem with new traders is that there's maybe overzealous, so they thought that they actually have to trade as much as possible, but it's actually not necessary. You always pick the easiest trades to do. Don't try and do the difficult trade. So to try and short the market in a bull, to short a bull market, is actually a difficult trade because the trend is up. So chances are when price moves up, it's going to move up with a lot more velocity and magnitude when compared to when it's coming down. So when it's coming down, chances are there's also a lot of buying pressure. So new traders should take note that it's not necessary to. It doesn't mean the more you trade, the more you're gonna make. Sometimes one good trade or a few good trades, you'd be able to make a lot more than if you were to keep on trading nonstop. Like a machine.
You said something. Yeah, and you said something very, very important. I have a whiteboard to the left of me, and on that whiteboard it says, "Make yourself available to the market and let the trade come to you." And I think that's one of the most important things for new traders, because if you think that you have to trade all the time, every day, look at your P&L and look at your monthly percentage in gain. And maybe that's, maybe you made like 5 to 10% in a month, right? And you made 50 trades or something, right? Let's say you made 50 trades, you're trading all the time, and you made 5 to 10%. Well, next month, try swing trading, and maybe you're gonna have like 2 6-hour winners, and you're already up 10% on the account in 2 trades. So less trading means less journaling, less headaches, less analysis, and
less stress.
Yeah, I mean, just it's so important to wait for the right opportunities. I don't know who said it, or I don't know the exact quote, but there's a saying that says like you're gonna wait for, like, a lot of people, they go searching for the bags of money, but the best traders, they wait for the bag of money to just appear in the corner of the room and walk up and pick it up, right? because that's how it is, right? Trading should be effortless, and I mean, with the co-vesting co-vesting platform, it
Better
don't
still,
get better
right?
than that. It don't get better than that.
Just green
So
and thick.
yeah. So yeah, remember that, guys. Like, wait for the trade to come to you, and don't overtrade, because overtrading, like, that's one of my biggest problems. Really, I mean, because I tend to really I I want to get into the trade, as quickly as possible, and
FOMO. Fear of
that's
missing
not a
out.
good thing. Yeah.
I think that's also where my trading improved, and especially waiting for that entry where I see my conditions being met, and then I realize that at that moment, the conditions are met, but there is still some volatility in the market I could use for a better entry, and even a small percentage for that better entry can improve your profitability a lot. If 1% each trade you do is 1% more on your account,
Yeah.
which you can even compound more. So I challenge yourself a little bit to, after you've entered, to keep monitoring your trade and ask yourself, could I enter on a better position at a better level? Did I enter too early, or did I enter too late? And in my case, I realized that I always entered a little bit too early. So what I did is I saw my entry and then just started stacking some orders below that. And it takes some practice, it takes some confidence to do that too. But eventually I saw those orders getting filled and getting a better trade and a much better risk reward. So always keep an eye on that.
Yeah, that's a very important point. I mean, so what you did basically is you did some trades, then you look at the results of the trades, and you try to optimize your strategy, looking at the what happened with price action, after you actually entered the trade, and that's such an important part to actually analyze yourself and your own trades. Like, that's how in the beginning I got stopped out a lot. So I remember getting stopped out, and then price just hit TP directly. Just stopped out and then reversed in the other direction.
Okay.
It happened all the time.
Yes. Happens
So I
very
looked at
often.
my so I looked at my
Especially in
trades, like,
Forex.
yeah, Forex is I really needed much wider stop on in Forex. But like, what I did was I looked at well, actually, what I do in Forex, I wait for that to happen. So I wait for, I look at where I want to enter, and then I ask myself, what would I like for price to do after I've entered? And then I wait for that to happen, and that's when I enter. Now, if that won't happen, I won't enter, because sometimes it's just going to hit my entry area and continue down, hit the invalidation area, and then form like a perfect retest of the entry area again. So that's when you kind of want to enter. Yeah, I was going to say something, but yeah, I completely forgot. So maybe Aperture can help me out here. I see he got something on the screen here.
Oh no, it was basically the market report. But
all right.
I have a question about that. Now we're talking to Kim about this, because you mentioned fundamentals in the market context too, and using fundamentals. And I see you using a lot of on-chain data. Could you give our viewers a little bit of an insight how you use this on-chain market data?
Right. Basically, on-chain market data tells you about what really is happening to demand and supply, the real demand and supply. Because if you are just looking at your trading screen, right, all you see are charts and volume. It doesn't really tell you, whether what the actual situation is, in the blockchain. So when we analyze cryptocurrency, because of the fact that cryptocurrency, everything is transparent and can be traced, it can be tracked, it's actually a rather easy to trade asset. compared with forex, for instance, whereby the central banks control everything, and you don't see what's happening. You don't get to see what's happening behind the scenes. So for cryptocurrency, I would say that it's a lot easier to trade cryptocurrency because this not like this thing that is veiled from you, something happening behind the scenes that we, the normal common folks, the normal retail investor is unable to see, something happening in the banks, perhaps they're talking about, wanting to do something, but we as traders outside the inner circle, we do not know what's going on, so a lot of times, a lot of things happen within the forex market that, takes people off guard. But in the cryptocurrency market, it's a little bit different because everything happens on the blockchain and everything can be tracked, everything can be traced. So there's a lot of all these data providers that they are doing us traders a favor by tracking all these things on the blockchain. And they will be able to tell you, if the miners, because Bitcoin is mined, right? Whether the miners are buying, selling, whether the miners are selling their mined Bitcoin in the market, okay, or if long-term holders have been accumulating Bitcoin. So far, right, my analysis of the fundamental on-chain data has shown that long-term holders are still accumulating Bitcoin. The very large wallets with more than 1,000 Bitcoin are still accumulating Bitcoin, whereas the sellers are all short-term traders who have come into the market within the last 2 months. So I would think that all these people are new in the market. They're new to cryptocurrency trading. They heard the news saying that Bitcoin has gone up a lot, and they all went in heavily leveraged, and trying to make as much money as they can with the maximum amount of leverage possible. So when you have just a small move in price, all these positions are going to get liquidated. So this is what's happening, and I'm very sure that that's what happened today. However, I've already looked at data. The amount of liquidation this time around today is not as high as that in April. The April one saw 10 billion liquidated. Today only saw 4, so it's not so bad because Bitcoin has already gone off quite a bit, in the last 2 weeks. But data is still showing, miners are, supposedly miners are supposed to be people who would keep on selling Bitcoin, but on the contrary, they are actually buying Bitcoin. And MicroStrategy today also added another 15 million Bitcoin. So all this information that we'll be able to see, on chain. So by analyzing all this on-chain data, we will be able to know, like a behind-the-scenes picture of what's going on the ground with regards to, the people who are in the Bitcoin business. So I think it's very important that other than technical analysis, we will look at all this fundamental as well. Just like if you were to buy a stock, you want to know the company's balance sheet. Is it healthy? The cash flow, is it doing well? So these, on-chain data analysis would be what we look at, which is very important for analyzing cryptocurrency. Because since it's transparent, we might as well use it, to our best benefit. So I find that the transparency is really, really good. The fact that we will be able to easily access on-chain data to analyze all these cryptocurrencies, it makes it a lot safer to trade. I think, despite the volatility, I think volatility creates opportunities. There's nothing to fear about volatility. As long as you plan your trades properly. So I find that cryptocurrency is boon to traders because it's a relatively easier asset to trade. At least my personal opinion.
Yeah, it is, and I personally had to shift in this. I realized that my strategies were trend following in this bull market, but I also realized that there were a lot of shakeouts to shake, especially these over-leveraged traders out.
Yeah.
We saw one of the biggest a few weeks ago, And I realized those were my ultimate buying opportunities. So
Yes.
also, like this morning, I woke up and I saw this bigger drop on Bitcoin, and I saw this double bottom, which you talked about, this chart pattern, and maybe this RSI divergence, and saw that the move seemed over, and most of the liquidity here was grabbed or being bought up. So
the volume at the lowest price was very high as well. So there were a lot of buyers on the sidelines waiting. And
yes, over
And,
there, and
yeah, using on-chain data, we could also tell because we were expecting eventually a lot of fresh, I wouldn't exactly call it fresh funds, but the crypto native funds in stable coins on the sideline waiting to enter the market because, we actually could see that there was a lot of stable coins compared to cryptocurrency stored at exchanges. So the amount of stable coin relative to exchanges, to Bitcoin at exchanges, was at a very critical level whereby the market could turn anytime. So this is one of the on-chain data that can actually also help us in analysis. Yeah, sorry if I interrupted you.
no, this is a good answer because we're getting some insights from the exchange side of the market.
Yes.
Mostly, we're only interacting with the traders themselves. But for you, of course, as an exchange, you need to assess the risks of a dropping market because, of course, you have market makers and you personally hold also liquidity. So you need to do these on-chain assessments and chart assessments, whether you might have to remove some risk yourself or be prepared for bigger volumes. So it's good to hear that. And I think we're coming at the end of the webinar. So because the next one is starting in a few minutes. No, I don't think the next one's starting in a few minutes, but I think this one is ending in a few minutes. Maybe one last question, Lips. Do you have a last question or?
Well, no, I don't really have a last question. I think the discussion here we had the last 30 minutes has been great. I think this is some really good information for the new traders out there watching. And I think this webinar right here has, I think it's good, man. I think everything's perfect.
Yeah. Well, then I would like to thank you, Kim, because you've been
my pleasure.
Yeah,
My pleasure.
you've been so enthusiastic in this discussion, and it's good to hear from the exchange side. And both Libs and I are trading on PrimeXBT. So
Cool.
we would like to invite the listeners to try it out. Hopefully, our listeners joined the giveaway. Maybe we can flash the code once more so they can enter because there is a big prize. 100 USD in Ethereum, 100 USD in Bitcoin on PrimeXBT. So make sure you enter the giveaway. And that was it for this webinar. Thank you again, Kim. And
Thank you for having me. Thank you.
It was a pleasure. Guys, I see you at the next webinar, and have a good day.
All right, take care, everyone.
Good day, everyone. Bye.